Hello and welcome today. Thanks for joining us today on today's webinar. This is brought to you today by B.O.S.S Retirement Solutions. My name is Ryan Thacker.
And I'm Tyson Thacker, and we are the Retirement Brothers from, as you mentioned, B.O.S.S Retirement Solutions. You can hear us every single week on Retirement Solutions Radio on both KSL and KNRS, as well as on Retirement Solutions TV on ABC4 Utah.
You know, we have a great group here today, and we'd like to thank you for joining us because taxes is on top of everyone's mind, and how you can save and minimize taxes. That's the title of our Tax Freedom webinar today, is how to save thousands of dollars in taxes in retirement on your IRAs, your 401ks, or other retirement accounts. But before we get started on this exciting topic, Tyson, what do we need to do?
First, you need to understand that we are not affiliated with the U.S. government or any governmental agency in any way. We're not affiliated with Social Security, and we are going to be talking a lot about taxes today, but the reality is that we are not tax advisors, we are not CPAs, and so go to your own authorized tax or legal entities to get your advice.
You know, these are things that our attorneys make us say.
Absolutely.
So we always have to say this at the very beginning, and obviously we want to get to the heart of the matter. And just a little bit of background about who we are at B.O.S.S Retirement Solutions. You may have seen us on CNN or heard us on the radio on ABC4 Utah. But Tyson, we have a lot of exciting things. One of the things that we're passionate about at B.O.S.S Retirement Solutions, B.O.S.S is an acronym. You'll notice there's periods between each one of those letters. It stands for Build the Optimal System of Security when it comes to retirement. And Tyson, when you do that, we've helped thousands of families right here on the Wasatch Front. What are some of the things that we're proud of this month?
These two things right here, winner of Best of State for Financial Services in Utah in 2019. We were just awarded that, as well as being one of America's fastest growing companies for going on 4 years straight. Both of those things, really, the reason why we bring them up is we feel pretty confident that we can help you in your retirement life, and we've got a great team that backs us up to make sure that you get the answers you need.
You know, one of the other things that we've learned is life is busy. Sometimes this webinar is going to be about 30 minutes, but sometimes you have life is busy and you've got to be able to jump on for a minute and then not be able to stay with this the entire time. Just wanted to let you know if you're one of those that are not going to be able to stay on with this, we have a great offer to help you understand and minimize the taxes that you're paying in retirement. If you've saved at least $200,000 for retirement, I would like to give you this opportunity to have what we call the forward-looking tax audit. Some advisors will charge thousands of dollars for this analysis, but if you book an appointment right here, you can click on the screen here. We won't charge you a dime. We make it simple and easy. This is what it's going to help you do, is to see what are the opportunities that are available to you to save tens of thousands, if not hundreds of thousands of dollars in retirement.
But for those who can stay on for the entire time, we're committed to keep this to 30 minutes or less. So we're trying to maximize the time that we give you as well with the information we have for you today. So the first question that we have is, what do you feel like will be your biggest expense in retirement? A lot of people, Ryan, feel like it's going to be their mortgage. Other people, when we ask them, say, I think it's going to be healthcare, because there was just a study that was done that said that there's going to be over, on average, $400,000 in healthcare over somebody's life.
That's not lunch money, right?
That's a lot of money.
But, when we sit with thousands of families right here on the Wasatch Front and we look at their scenarios, most of the money for retirement has been saved in IRAs, 401ks, TSPs, 403bs. We just simply call it the alphabet soup of retirement accounts. And folks, I will tell you this, your biggest expense in retirement will most likely be taxes. And Tyson, we're not the only ones that are saying this.
We're not. In fact, Time just recently came out with an article saying why you need to understand that there's a $2 trillion tax bill that's coming due to the baby boomers. Another big number, $2 trillion with a T, not with a B, not with an M. Forbes just said future tax rates will have to be higher. And Bloomberg just said today's tax cuts are tomorrow's tax increases. So we've got this really great window of opportunity, Ryan, to really help people to save a lot of money on taxes. And that's what we want to focus on today.
Well, and 2 trillion is a big number, but we want to show you another big number, $640,459. I want you to think for a second, if you're nearing retirement or you're already starting retirement, what would you do with an extra $640,459?
That I could spend $640,000 on.
I mean, people come to us all the time and say, hey, I'm concerned about running out of money. I wonder if I'm going to have enough to pay for health care. I really want to be able to, my kids and grandkids are all over the country. I want to be able to travel and see them and see those important milestones in their life. And so we're going to show you a hypothetical example today. Of course, every single one of you are going to be a little bit different, but we're going to show you an actual case study of how these 3 areas of taxes could impact you and what this number of 640,000 means to you.
What we really want to say here is, if you've been a good saver, and we know a lot of you have, and we meet people all over the Wasatch Front in our 6 offices who have done a tremendous job savings, but unfortunately, our government system punishes people just like you who have been great savers. And here's the next reality. If you don't make changes to your tax situation, you could get literally clobbered.
I don't like the sound of that.
When you retire, just from taxes, let alone anything else that we could be talking about within your planning.
And here's what we mean by that. It's going to be taxes on your Social Security benefits, taxes on your IRA, 401k, pension, or other retirement accounts, taxes on your investment income, even possibility of taxes on your estates. Basically, Tyson, that's the areas where you can get clobbered when it comes to taxes. And the challenge with this is that the money that you were counting on to help support you in retirement, it could now just be a fraction of what you thought it was going to be.
I like keeping the stuff on the left-hand side of the screen versus the right-hand side of the screen, Ryan.
The right-hand side is the chump change. No one wants the chump change. Everyone wants to keep the bigger dollar amounts, right?
That's right. And so when we talk about potential tax savings, again, this is a hypothetical situation. Every situation is going to be a little bit different. But if you've saved, for instance, $250,000 in money to be set aside for retirement, that could save you tens of thousands of dollars in taxes, Ryan. If you've got $1 million or more, it could be hundreds of thousands of dollars that you could be saving in taxes. It is a big deal that you need to understand that you could turn this thing on its head and keep that money in your pocket instead of giving it away.
What's interesting about this is so many families, when they come in to meet with us for the first time, they think, well, there's just nothing that I can do about taxes. It is what it is.
I got to pay the piper.
And it's just part of life. And folks, we're not saying, of course, you want to pay your taxes, what you legally owe.
And we're not doing anything crazy here.
We're not talking about tax loopholes or anything like that.
We're just using the code and helping you to understand how it works in your favor.
And if you walk out of here, one of the key points that we want you to remember is that you have more control over how much you pay in taxes in retirement than at any other time in your life. And there's a key important principle of what you need to do with that, right, Ty?
It's the difference between tax preparation versus tax planning. Now, a lot of people would say, I don't see a lot of difference there, but there's a huge difference, is that tax preparation is something that you do with your accountant or your CPA, and what you're really doing is you're simply reporting the history to the IRS as to what happened in the last year. So you're looking in the rear view mirror as to what already happened. Nothing can change in that circumstance,
what
right?
happened last year, it's a historical versus tax planning. Now, this is where if you want to pay fewer taxes, this is where planning is a year-round sport. It's not something that you just do one time. It starts right now, and this brings in other areas like it could impact the decision on how and when you claim your Social Security benefits. Tyson, a lot of people are not aware that Social Security by itself can trigger an avalanche of taxes. You can pay taxes as much as 85% of your benefit. You also can double your Medicare premiums, cause you to forfeit spousal benefits and other benefits that are rightfully yours. And I think, Tyson, having an example to help us bring these numbers and crystallize those together will help the viewers today be able to see this.
Yeah, so let's talk about tax impact number 1, which is taxes on your Social Security benefits. And it all starts with the B.O.S.S retirement blueprint. This is an example of when somebody came in this case, Bob and Carol, they came in and we started out talking through how this works for them and understanding what their current situation is, right?
That's right. And this is obviously a hypothetical example. Their last name is Avatar, Bob and Carol
That's
Avatar.
why we named him Avatar.
And what you can see here is there's areas in the B.O.S.S retirement blueprint. These cover the most important areas that you're going to run into in retirement. Covers the cash that you've set aside for an emergency fund. It identifies the income sources. In this case, they have Social Security and a pension. Identifies the assets that they have that are growing for them, their 401k, their IRAs. Identifies if they have a tax strategy or not. And then also identifies legacy assets, like in this case for Bob and Carol, it's their home. And then on the right-hand side, what you see is how much they're spending every month. Pre-retirement, they're spending $5,000. With inflation, that's going to be $5,830. And I'm telling you, the next thing under that is their retirement income sources. They've got Social Security. They've got a pension. I think that looks pretty good for Bob and Carol, right?
It seems to be pretty good, but then you got to understand and go a little deeper as to what else is going on behind the scenes, right? So, Ryan, you mentioned just a minute ago that you could have up to 85% of your benefits taxed, and we want to help you to understand how this works. So if you look at that top line, starting with adjusted gross income, how they calculate what the combined income looks like, they take all of your non-taxable interest, they take half of your Social Security benefits, plus any other income that you've got, and that becomes your combined income that they use to calculate how much you're going to be paying in taxes. So if you're an individual and you've earned greater than $34,000, $34,000 or greater, you're going to be paying 85% tax, not on the bracket, but on 85% of your Social Security. You're going to be paying taxes at your current bracket. If you go to joint, it's $44,000 or greater that they look at that combined income to figure out how much you're going to pay in taxes. Now, Ryan, one of the things that we love when somebody comes in is understanding their Social Security story. Tell us a little bit about that.
Well, one of the mistakes that families make is they take their Social Security benefits at face value. You've seen this statement, comes from the Social Security Administration. If you're over the age of 60, that's going to come annually on your birthday. If you're younger than the age of 60, you need to go to ssa.gov. And inside this statement, it shows you here's your earnings history of how much you've paid into Social Security by the year. And then it also totals and tells you how much you've paid between you and your employer into Social Security. And Tyson, this, for many families, if you've earned an average income, this can be over $100,000 that you paid into Social Security. If you're married and you've earned an above average, this could be hundreds of thousands of dollars that you've saved into Social Security. And what most people think when we talked at our public workshops is most families feel like, well, I've already paid taxes on it,
right.
12.4% of my income.
I pay it again?
I'm not going to pay any taxes, but wrong.
Not too long ago, we did a show called Mr. and Mrs. Double Tax and Triple Tax on the radio, and this gives you an example of how this works. This potential hypothetical client had $54,746 in gross income. And so when they did the calculation, $39,753 of Social Security is taxable. Now you think to yourself, well, that's just paying the piper, right? I've just got to do that. But when you understand that you've got other income streams, there are now a lot more to the equation than you ever thought possible. In fact, if you look to the far right, you say total taxes owed, $10,865 in total taxes. When you look at the federal gross income, you combine the gross income plus the Social Security, and it becomes a bigger deal than you think, even with the changes in the tax code.
But, Tyson, if I look at this, if I'm just looking at this at face value and I'm thinking, okay, that's not that big of a deal, I paid a lot more taxes when I was working than $10,865.
Just wait.
Okay, well, I'm thinking that doesn't sound like too bad, but
what happens at required minimum distribution time at 70 and a half, Ryan?
We have tax impact number 2, and that's your required minimum distributions. Now there's some recent legislation. They're talking about pushing this back to 72 and a half. But this is where it really starts to compound. If we go with this couple, Bob and Carol, just 10 years later, so now we have Social Security, they're taking a pension, Plus now, Uncle Sam says, hey, wait a second, all that money that you put into your 401ks and IRAs, well, now you need to take a required minimum distribution. And when we look at this, now the income increases because they're pulling out required minimum distributions.
A lot bigger number.
And all of the sudden, just because they got a little bit older, because they hit the magic age of needing to pull this out, they went from $10,000 a year up to $52,000 a year. You can see that on the right-hand side there.
Total taxes owed.
$52,452. Tyson, this isn't Mr. and Mrs. Double and Triple Tax. This is Mr. and Mrs. 5 times the tax.
Mr. and Mrs. Gotcha, right? And so this becomes a huge differentiator that you need to understand this information. We believe that if we give good information to good people, you can make great decisions. These two first scenarios, as it relates to how you take your benefit with Social Security, how required minimum distributions work with your IRA, your 401k, how that can impact your taxes is a pretty big deal. But let's add another layer on top of it, Ryan. And when we talked about the difference between tax preparation and tax planning, we're going to jump into now the next or third phase of tax planning opportunities. And Ryan, this really gets to the heart of qualified plans. Now, again, this is a hypothetical example. When you come in, though, you'll be able to see this same information that we'll be able to help you to see and how specific it is customized to you. So in this case, you see right at the top, current pre-tax qualified accounts. So that's money in their 401k, their IRAs, their TSPs, whatever it is, all qualified money that has been put into those accounts as pre-tax money. So when it's pulled out, all of that money is going to be taxed, not only that you originally put in, but the growth. So what happens with these RMDs, Ryan?
Well, this is where it's time to pay the piper.
Yep.
This is where Uncle Sam now gets his money. And if we look at 3 areas on this, this couple, if they keep going down the road, Bob and Carol, staying the same way, they would pay, first area, just required minimum distributions. If these accounts are growing by 5% from age 70 and a half to 90, which is their life expectancy, they're going to pay in that box number 1, $443,154. Then because they don't need any extra money, their lifestyle's covered, they don't need the withdrawals,
but
they
think
reinvest
about
that money.
That's not what they pulled out in RMDs. That's taxes on the RMDs.
Exactly. Next area, they don't need the money, so then they reinvest that. That's earning 5% as well. That's another $209,332. And then eventually, Tyson, all of us one day, it's going to be our numbers up. We're going to pass away. For Bob and Carol, when they pass away, they're going to pay another $287,634 for a grand total of $940,120 to Uncle Sam off of $1,033,313.
That's not lunch money.
Nope. And guess what? You'll notice there's a 4th line that's blank there. That is the amount of taxes that you'll pay on Social Security. So it gets even worse than what you're seeing.
We've been conservative because we haven't added that Social Security piece from the first 2 layers that we've already talked about. You also need to consider that right now taxes are on sale, and that you need to understand that taxes are lower than they've been in the last 40 years. So now we go to the right-hand piece of the equation, and you see there's still, if we do some tax planning, and we won't give you all the logistics of how this works, but we're very specific year by year on how we do this planning. There's still a lot of money, almost $300,000, $299,661 that's been paid in taxes. So again, we're not trying to avoid paying taxes. We need to pay what's due. But the reality is when you look at the difference between those two, it's a $640,459 difference that gets to be put back in your pocket instead of paying it to Uncle Sam. You get to control how that money gets used. And that's why we said at the very beginning, how would you use that money? Because that's additional money that you weren't planning on if you just took your taxes at face value.
Well, paying Medicare premiums doesn't sound very fun. So maybe like going traveling, going golfing, going to Europe once in a while, going to Mexico, that would be fun. And, I think some people look at this and say, well, how does that happen? How does that work? And I think what you need to understand is right now, the new Trump tax plan, love or hate President Trump, it doesn't matter. there has been an opportunity that's created with the new tax plan that could be your best opportunity in over 40 years to save thousands of dollars in taxes. And let's talk a little bit about how this works and why this works. Number one is if you look at the old 22% bracket went up to $168,400. That's the cap. In other words, you can have earnings up to $168,400, and you'll pay 22% of that in federal taxes. This bracket now has been pushed up to $321,450, and that now stays in the 24% bracket. Now, before the tax change, you'll notice this is as of 2019. That 24% bracket used to be the 28% bracket.
Right.
And that went up to $153,000.
So in other words, you can earn a lot more money before you go into the next bracket, and with proper planning, and these brackets stay the way they are until 2025, and then they go back and they sunset to how things were before then. So you've got, again, this window of opportunity for us to do this tax planning and to help you move this money into the appropriate accounts so that you could save a ton of money in your tax planning versus your tax preparation. Now, here's the reality, Ryan, is many people who don't do the tax planning will pay through the nose when they retire in taxes. But we want you to be one of the smart and savvy few who are going to be able to legally pay far less. Which category do you want to be in? You know, you look and you look at your neighbors, you look at your friends and family, and there are a huge group of people that could fall into this. But historically speaking, statistically speaking, there's just going to be a few that take advantage of this.
You know, so as you're thinking about this, you have a choice. Number one is you can do nothing and continue to simply file your taxes on April 15th every year with your accountant, CPA, or if you do it online with TurboTax or some other type of software. Or you can be one of the smart and savvy few that can be proactive and take advantage of the strategies that could help you save a small fortune in taxes. And Tyson, this is one of the areas that we specialize in at B.O.S.S Retirement Solutions. And we have the 6 offices on the Wasatch Front to help families. Basically, if you live from Ogden to Provo, there's going to be an office close to you within about 20 minutes that you can come in, you can sit down, and the first step is receiving clarity, right?
That's right.
Let's talk a little bit about what it's like when you come in and meet with us at our office.
When you come in and meet with us for the very first time, we ask a lot of questions, not to intimidate you, not to have you feel uncomfortable, but each of our advisors, when you come in, you'll probably have them listen more than anything because they really want to understand your story. And one of the things that we want to create for you is what we've already mentioned, which is this B.O.S.S Retirement Blueprint. This is the start of our planning process. It's also one page for a reason. Leonardo da Vinci said simplicity is the ultimate sophistication. And we really believe that when we talk about these different buckets of money, that you need to understand this. So you could turn to your spouse or significant other and say, yeah, I understand this. When we go from the income bucket to the growth bucket to the tax bucket and so on, that I understand why we're doing the planning that we're doing. So when you come in, we understand that current situation, as we've already discussed. When you come back in for a second appointment, we're going to focus on that second group of lines to help you to understand what needs to change to make sure you don't run out of money as far as income is concerned, to make sure your money is growing the way it should, to ensure that from a tax perspective that we can save you as much as possible so that you can leave a legacy to your kids, grandkids, those organizations that you love. They're going to be a significant part of your future.
Well, and we like to say retiring successfully doesn't happen by accident. It starts with a plan, and that plan is the B.O.S.S Retirement Blueprint. But in addition to that, we need some other tools and strategies. It's like a cell phone today. It has so many different uses. It's your email, it's your phone, it's your GPS, it's your flashlight. Today, retirement planning has changed significantly. If you've been with the same advisor for the last 10, 15, 20 years, and you're thinking, okay, this is what's available, it's probably worth your time to come in and look at this, because this right here, what you're seeing on the screen, is what we call the Social Security analysis. This is where we take all of that information. This is a 29-page analysis on your benefits that also includes Medicare, so you can take a look at that. fabulous information. We've now helped over 20,000 families on the Wasatch Front receive information on how and when to take their Social Security benefits so that they can make an informed decision. It's going to help you know the exact timing of when and how to take your benefits, how to avoid or minimize the taxes that you're going to pay on your Social Security benefits, plus how to be able to make sure that you get the most out of your benefits that you've paid into.
That's a huge piece, and which leads to the next tool and strategy that we want to talk to you about, which is our risk and our fee analysis. What you're seeing right here is how much risk this hypothetical client could be losing in their portfolio. In this case, $344,056 if we had another event like 2008. Now, the bull market's been going on for over 10 years. It's the longest bull market in the history of the stock market. What goes up must always come down. And so we can help you to see your own customized numbers as it relates to how much risk you're taking, as well as for the first time ever, how much in fees that you're currently paying, and we'll also be very transparent in how our fees work. So probably for the first time, you understand all of the pieces of the equation.
And then finally, what we consider the most valuable portion of this is the potential tax impact, which we showed you in the scenario today. Understanding how can you minimize the taxes on your IRAs, 401ks, or other retirement accounts, and the ways that you withdraw those, combine those with Social Security. So you can see on the screen there's 4 amazing tools. And Tyson, this is not going to cost you one thin dime. If you've been listening on the webinar, you'd like to take advantage of this, we're going to run this completely for free. Some advisors will charge thousands of dollars for this type of analysis. We're not going to charge you one thin dime. How can they come and visit with us, Tyson?
Well, you have the opportunity first to come into any one of our 6 offices along the Wasatch Front. Again, Ryan, you mentioned from Ogden all the way to South Provo. We built the offices and put them in locations so whether you work or live within the Wasatch Front, you're within 20 minutes of help to understand how this is going to apply to you. Now, keep in mind, Ryan, that our employees and representatives are not authorized to give tax or legal advice, and we're encouraging you to seek advice from your own tax or legal counsel. But we work hand in glove with your tax and legal advisors so that they understand what's going on as well, and that we help educate them as to how we can help you take next steps.
So we want to thank you for being here. And it doesn't matter if you've saved $200,000 or if you've saved $20 million for retirement. The tools and strategies that we've talked about on this webinar today are so powerful. And when you come in and visit with us, this gives you clarity and vision so that you can take control of your retirement. In other words, you can be the boss of your retirement as you go through. To come in and receive this analysis, it's not going to cost you a dime. You can click on the screen right here. That will take you to the analysis so that you can make sure that you receive this valuable information. First meeting doesn't cost you anything. Second meeting doesn't cost you anything. And at the end of the second meeting, we're simply going to look at your scenario. And if there's some areas that we can help you with in that, we're going to talk in plain language. Here's what it'll cost. If you want us to fix these things, here's what we can address these with. We've got all the tools and resources with tax and legal help if you don't have it. And we want to help you be able to enjoy a secure and independent retirement.
Now, Ryan, you mentioned that we do a lot of legwork from that first appointment to the second appointment. Let me be clear on who we don't need to come in, or that just because you watched the webinar today, you don't have to feel like you need to sign up for this. The reality is between that first and that second appointment, our advisors and the team that work behind them are going to be spending somewhere between 8 and 15 hours on all of those resources and strategies to help you understand with clarity what next step that you can take. So we're pretty darn serious about creating the plan for folks, and we only want to talk to those who are serious about the planning process and for them to understand what this looks like as well in their customized scenario. With that, we look forward to seeing you in one of our 6 offices very soon. We've been excited to share this information with you, and we know that as you have the opportunity to see what you can see, it will go back to what we said, is a successful retirement doesn't happen by accident. It starts with the B.O.S.S Retirement Blueprint. Have a great day. We'll see you soon.